Hello everyone, and welcome to this educational presentation of two powerful ways to trade the current down market. Now, we all know that the market has kind of gone into a free fall. It had a little rebound yesterday, but for all intents and purposes, the last week or so has been pretty negative, and a lot of traders have a very difficult time once the market changes environments. Mostly do well when the market is going up or in a nice steady uptrend, but once we change environments and start to go down, a lot of strategies, a lot of systems don't work. And I'm here today to educate you on the two different styles in which you can actually trade a down market and how they will really help you once the market starts to go in a downward mode. For example, now this came out on the 14th. The Dow drops 800 points, the worst loss of the year as investors fear global recession. A lot of bad news came out. A lot of people were frightened of the market. At this point, this is where traders usually get out of the market because they feel like, well, we're in the news now, and now it's actually come out front where there may be a recession looming around the corner later on in the next year. So this is where the news came out right here, and this is where traders usually exit. That's why the market opened down so much. But with the two different styles I'm going to be sharing with you today, particularly one style that is perfect for trading down markets, you actually could have taken advantage well in advance by having not only one, but two different setups prior to the downward news. And that was a daily chart. You can also see this happen on an intraday chart. For those of you who are intraday traders, there's a 10-minute chart of the spiders, the ETF that represents the S&P 500. This was actually on the 14th, as you see down here in the lower hand corner. This was the day the news came out. So even if you are an intraday trader and you're not involved in the longer swings of the market, you could still take advantage of this with a strong downward move by seeing all these different entry setups take place. And you're going to see how simple this is to implement on our platform, the PTS Primo charting platform. This is the educational platform that actually makes trading down markets simple. So welcome to this Saturday presentation. My name is Steven Primo. I'm the president and founder of Specialist Trading. And today is kind of a different type of educational webinar because I'm going to be talking about a brand new course that we're going to be offering. This is going to be a live course, a 2-day course where we're going to be actually teaching you these two different styles of entry points. And I'll go into detail in just a few minutes. So welcome once again. My name is Steven Primo. I'm the president and founder of Specialist Trading. And if you're new to my webinars, we are first and foremost an educational company. Now, I've been trading for 42 years, and if there's one thing I've learned in my 4 decades of trading, the main reason why most traders fail is because they lack the education. They feel as if they haven't got enough information, or they're not experienced enough. So the first thing they do is rely on someone or something else to make their trading decisions for them. And this couldn't be any further from becoming consistent than anything I know, because this is why you take yourself out of the game. You feel as if you really aren't qualified to trade and make your own decisions. So you trust what a trading guru is saying. You buy some system that automatically generates buy and sell signals that you have no idea what they're based off of. Or you listen to someone on TV tell you what they think you should buy or sell. And maybe it'll work for 1 or 2 good trades, but mostly you give it all back. I know this from firsthand experience because when I first started trading, the same concepts, the same traditional wisdom was implied on me when I first started, and it didn't help me at all. So I was lucky enough to have some mentors that taught me the things, that educated me, the things that are really consistent in the market. And this is what I'm doing now, passing that along to Specialist Edge so that you can be in charge of your own trading decisions. So I'm going to share with you some really nice styles and ways in which to trade, and you can start implementing as soon as you become a member of our courses. But before we begin, as always, we're first required to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these particular styles, but please remember that we can in no way guarantee that any of the entry techniques I'm about to share with you will be repeated in the future. Also, please remember that all examples are strictly for educational purposes only. Now, as you're taking a moment to view our disclaimer, once again, if you haven't done so already, we have a lot of new students here today, so feel free to follow us on Twitter. I post different information on a daily basis, bits of financial wisdom to little signals that our strategies have generated, lots of different educational information. So feel free to follow us on Twitter. There's our handle right there. You may want to copy that down. And I post information on a daily basis. Now, once again, as I stated in the beginning, we are different from other webinars you may have attended in that we're only trying to educate you. And the purpose of today's presentation is to share with you a great educational course that we're going to be offering in the next 2 to 3 weeks, specifically for our attendees and for our students at Specialist Trading. So let's begin today's presentation and let's talk about exactly how to trade these markets, okay? All right, so there are two powerful ways to trade the current down market. Now, I know a lot of people think, well, wait a minute, we had two different ways. I thought we can trade with news, we can trade with indicators, we can trade with support and resistance, volume, systematic trading. Sure, those are different categories, but when you're actually trading, there are two distinct different styles, and both of these really lend themselves well to trading the down market that we've currently experienced. But one actually lends themselves more to trading the down market, because down markets are different from when you have nice steady up markets. Up markets are going in a standard type of stair-step approach that, 2 step forward, 1 step back. You have this kind of stair-step where the market goes up very slow and regular, and then it kind of pulls back, sells off for a little bit, and then gains up enough strength and then goes to makes higher highs. That's all because, it's orderly and news and fundamentals are fine and people are not worried. But once you go into a downward trend, that's where emotions really sink in. That's where fear starts to take place. So when fear comes into a down market, it's like everyone, it's like someone yelling fire in a crowded theater and everyone trying to get out the doors at the same time. All right, this is what happens in a down market. Everyone is frightened, everyone is scared, so they're all selling at the same time. So what happens to the market? Well, they have these nice, strong, volatile downward moves. All right, so this is where these two styles come into play. And this one particular style, which we're going to be talking about momentarily, the main purpose of today's presentation, really lends itself even better to down markets. All right, so as I said, there are only two types of entries. So don't make it more complicated than it has to be. This is what we're going to be talking about today. Now, the first is a pullback entry. This lends itself more to upward trending markets. So as you can see here, a pullback in this generic chart has a nice upward move, an upward trend, and then we sell off. This is where everyone thinks the market is topped out. But in all actuality, if the trend is strong enough, this is just a pullback. And this is where you want to purchase because you can buy at lower prices somewhere around these levels once the requirements are met. And once that sell-off has concluded in this kind of a stair-step approach, you have the resumption of trend, okay? And this, as I said earlier, lends itself to up markets. As we see here, we have a nice upward trend, and then there is a sell-off, where most people think, well, that's the top, we have all the resistance, all the institutions are selling. The trend is still overall up. And with this particular style that we're going to be talking about in a few moments, this generated a buy signal, and as you can see, the trend resumed higher. Now this can work on the downside. As you see, you have a nice strong downward move and you have a bounce and everyone says, well, it hit support right there at that Fibonacci level. Look at these 3 days, they stopped right there. So this is the time to go long, right? We gapped up, there's a lot of buyers. In all actuality, that was a sell signal because the overall trend was still down. This is just a pullback to the upside and the trend resumed lower. And you could also see that kind of in shallow pullbacks. A shallow pullback is really not that well defined. It's kind of sideways to just lower 2 or 3 bars, but then the upward trend resumes. These are all examples of that particular style. This lends itself to upward markets. But what about if we're experiencing downward markets the way we've currently experienced? Well, this is a continuation entry. This is the entry that can really help you with these downward, strong downward moves, okay? So what exactly is a continuation entry? Well, even though this example is showing an upward move, it means that there's a strong trend in place, whether up or whether down. It makes no difference. And a continuation entry means we don't stop for a sell-off or a pullback or a pause. We just buy according to certain parameters all along the way, either up or either down. You're just waiting for a continuation, but you're not waiting long. You're waiting for some requirements to be fulfilled, and you get in. You're not going to wait for that pullback. You're not going to wait to buy at lower prices. Or you're not going to wait to sell at higher prices the way you do for pullbacks. The difference between this and a pullback type of trade is that that particular stop does not generate a lot of trades. As you saw, pullbacks, you have to wait for that to happen. If it doesn't happen, if you don't get that little sell-off or that bounce, you won't get a signal generated. But with continuation entry techniques, if there's a strong enough trend, you'll get a lot of signals generated. So if you're the type of trader who likes to trade a lot, continuation is the way to go for you. All right, so let's look at this current example here. As we see in CASY, there's really no trend happening here, but all of a sudden things happen and we move straight up, and there's a nice strong trend happening. Well, with this second style, this continuation entry, you see signals were generated all along the way, not waiting for a pullback, but as we continue to go higher. And this is where it really works well to the downside. This is a recent chart of Cisco, CSCO. As you can see, the market was headed lower and lower. This is on the 14th and 15th when the market fell out of bed. And look what happened here. Sell-offs and sell signals all the way down, okay? Now, it can also work on a strong upward move in PAGS. As you can see, the stock continued to go higher and higher. At this point, there's really no selling off at all. So this is where this type of style works perfectly. Now, a lot of you are probably saying, well, wow, this is interesting. This is great. What was the basis for these up and down arrows, though? What were they being generated off? What were the requirements? Well, this brings us to today's topic, which is steps. This is what we're going to be having a new course on. Steps are proprietary entry points. So if you're not familiar with what steps means, it's simply short-term entry points, okay? These are the signals, the up and down arrows that were generated automatically on our platform because they automatically generate these proprietary entry points that I've learned over the years that have high levels of consistency. But here's the thing where most students have very difficult with steps. They think that it's a strategy or an indicator, and it's not. Steps is neither a strategy nor an indicator, but two completely different proprietary entry techniques. Those are the two different styles. One of the styles is a pullback entry technique. Another is a continuation entry technique. Now, steps can be applied to your current trading method, so it doesn't matter. You don't have to change your method altogether, or it can be used as a building block for the construction of a method. If you're the type of trader that likes to build strategies or systems, you can use this as your entry point. But remember, the main thing we want to clarify is that this is not a strategy. It's not a system. It doesn't come complete with stop placement. It doesn't tell you where to get out. It doesn't tell you how many shares or contracts or futures to buy. It doesn't give any of those important pieces of the puzzle that you need in order to have a full-fledged strategy. What it is just one piece of the puzzle. But over the course of years where we've interviewed students and prospective students, they've all told us that the entry is the most difficult part of their method. They can be right on purchasing a market and thinking there's a buy signal there, but their entry is either too early or too late, or maybe they don't know how to get back in. And so this is what steps is perfect for. If you're having trouble with your entries, or if you need a point of entry, let's say you like a market or you don't like a market, such as last week. Let's say you really thought the market was going to go down, and then once it went down, you didn't now know how to get in because it gapped down tremendously. Well, this is where steps comes into play. All right, so steps 2 was the actual pullback entry technique. It's an entry points designed for pullback traders. But what we're going to be focusing on today is steps 1. Okay, in future webinars, I may spend the entire time talking about steps 2, but today we want to focus on steps 1 because steps number 1 are entry points designed for continuation traders. And remember, as I stated, when you have a strong downward trend, the way we've experienced the last couple of weeks, this is where everyone's trying to leave a crowded theater at the same time out one door. And this is where everyone piles in. There's a lot of fear and there's a lot of worry. That's why the markets go straight down. There are no pullbacks that take place in a market like this because it's just moving down lower and lower and lower. So if you're the type of trader who wants to wait for a little bounce to get short, you may have to wait a long time. This is where steps 1 comes into play, and this is what we're going to be talking about today because we don't know what's going to happen in the coming weeks or months. The market may reverse and go straight up again. But if it decides to go down even more, with down strong markets, you're going to get these straight down days. And steps 1 is perfect for trading those days. Remember though, steps 1 is simply an entry technique. It is not a strategy. But if you're looking for points to enter, this is perfect for you. All right. And we're going to show you all the next examples, all the displays, the chart displays and examples were generated on our PTS Primo charting platform. This is the platform that makes trading steps simple because the signals are automatically generated on the platform itself. And we're going to show you the process of what you could have done this last couple of weeks using steps 1. Okay, I'll show you some really current charts that happened just in the last week or so. All right, let's look at this first one in SQ. Okay, obviously looking back to the first week of August, this is a chart starting at the beginning of August coming into the 14th. The market was going lower. This particular stock was headed lower. If you wanted to take advantage of this, you said, well, I think we're really in a downtrend now, but there's no pullback here. I don't know how to get into this trade. All you have to do is do this simple process on our platform. Click on steps number 1. The drop-down menu appears and click on signal arrows. And automatically you'd get 1, 2, 3 different scenarios where you could have gone short. If you'd taken the first one, that would have been 9 points coming in to the 14th where the market fell out of bed, 800 points. Now, this is prior to that day, okay? You could have already gotten short. So this is the beauty of this. If you already have an idea of the markets or whatever you're trading, it could be currency pairs, could be futures, could be Bitcoin. It makes no difference, even commodities, but you don't know how to get in. This is where steps can really help you. How about this example in TPR? Once again, coming into the day, the market fell out of bed here. Here we have the market's really falling lower. Now, not much of a pullback. If you're a pullback trader, you say, well, I'm going to wait for this to bounce up 2 or 3 days. I'll sell at higher prices. Maybe I'll buy the puts. The premiums will be low and I'll get in before the market really starts to tank. I think this is a really bad scenario for the market. You would have had to wait a long time and you never would have gotten in. But if you simply clicked on steps 1, if you really didn't like this market, the drop-down menu appears, click on signal arrows. Look at all the chances you had to get short prior to the big downward day, okay? How about this example in Halliburton, okay? Once again, coming into this last week in August. Not much room here to trade with a pullback. Now, someone could say, well, wasn't this a bounce or pullback? Well, sure, but maybe, it didn't do it enough days. Only one up day before it started to go back down again. And this is not really a pullback. This is kind of just a sideways action. So once again, let's say your analysis or your strategy or your system does not like this particular stock, but it's not generating any signals. This is where steps can really help you. Because let's say your strategy is based off of selling at higher prices. Well, you didn't really get a chance to sell at higher prices here. All you have to do is apply steps and look at the different options you had to get in. Now, how you decide to get in is up to you. Remember, steps is not a strategy, so it's not telling you to buy the puts. It's not telling you to get some spread. It's not telling you to actually short the stock. It's just pinpointing these high levels of consistency in your entry point. How you decide to trade is really up to you. Okay, Acer, as we can see, once again, if you had waited for a pullback in this particular stock, there is no way you would have gotten in. And this is where a lot of students and traders become very frustrated because they'll say, gosh, Steve, I was right on that market, but I never had a chance to get in. I missed it entirely. And this can be for intraday trading as well. How many times have you seen a really fast market and you really don't like it and you're waiting for your strategy or your system or your rules to all be met and then nothing happens, right? And you miss this great move. Steps 1 is perfect for those scenarios because look at all the chances you had to get short or to sell. Now, we know here that this was a small move to the downside. I believe this is only a $2 move or 2-point move. But that's a 50% loss. So another way you could use this is actually to get out of a stock. So let's say that you were an investor in Acer, okay? This is an inexpensive stock, and you think that it's going to go higher. But you know what? You start to really feel uncertain about the markets. You're a little bit frightened, and you're saying to yourself, you know what? I'd rather be in cash now. I know I purchased this at maybe $5 or $6, but it's not going anywhere. In fact, it looks like as if it's going lower. Well, all you have to do is click on steps 1, and at the very first exit point, you could have used that not to go short because this is only a $4 stock, but to exit your position, and you would have saved 50% because the stock basically lost 50% coming into this week in August. Now, it can be applied to inexpensive shares such as Acer or to more expensive ones as we look at the next example in CGC. All right, here's a $40, $45 stock, even $50 stock. Now, we had a couple of pullback scenarios here. You would have had to have been very quick to take advantage of this one right here because other than that, we were going pretty much straight down. If you really didn't like this stock, if you really wanted a chance to get in, steps 1 would have really helped you to the tune of 17 points. Had you taken this very first setup, look at the nice 17 points coming into August and the big down day, okay? And still even more, we can go into more expensive, into newer. We can go into a $90 or $100 stock, NEWR. Now here we have a couple of pullback scenarios. Here's a pullback right here. Here's another pullback. But once that happened, look at the big downward move here in the beginning weeks of August, okay? If you weren't a pullback trader, or if your strategy was never able to generate any signals, look at the nice signals you had well in advance. This was in June. And then in July, all the signals you could have taken advantage of. And then even last week, on this nice little setup right here, you could have gone short roughly around 62, 63, and the stock was trading nearly 5 or 6 points lower. So this is the beauty of steps number one, because it takes advantage of this fear that's in the marketplace. Okay? Now think of it. Think of the way you've been trading, or think of maybe the setups you missed this last week, or maybe you were long. Steps one could have helped you tremendously in either exiting your positions to get out of the market, or in taking advantage of the strong, volatile downward moves. And lastly, we can look at this stock right here. Here is intraday trading. Okay, I know a lot of you are saying, well, Steve, this is great, but I don't trade overnight. I like to trade intraday. I trade futures or I trade stocks intraday, and can this work in those time frames? Well, let me give you an example here as we look at a 30-minute chart of the spiders. This was coming into August at the end of July. Let's say that your strategy or your system, whatever it's based off of, in this particular example, is based off support and resistance. So once you broke this support right here on a 30-minute time frame of the spiders, you want to go short. That's your key to selling this market, all right? And so, as you can see on the very first opening 30-minute bar here, it closed and it opened gapped down below that support level. So you sell, all right? And then this happens for the next day or so. You actually kind of go sideways to higher. So you're in this short for a couple of days. You don't feel comfortable about it because it should have broken down and gone down. So you say to yourself, you know what? I'm going to exit with a loss here. I guess this didn't work out. You start kicking yourself and saying, boy, this $10,000 strategy or system I bought based off support and resistance doesn't work. This is the 10th trade I've had, and all of them have been losses. I don't understand this. And so you decide to quit trading. But if you had had steps, this is all you'd have to do. Because remember, steps is based off those strong, volatile continuation moves. And once it senses that with the proprietary requirements, well, look what happened, okay? You actually were right in going short, but you just got in too early and you started to get scared and worried, so you stopped yourself out. What steps does is it waits for confirmation of that nice continuation, and then all you would have to do is click it on and look at the entry points you could have had, all right? So if you have a system or a strategy that is actually right, but maybe your entries are faulty, it's having you get in too early, or maybe you get in too late, you miss the big move, by the time you get in, the move's over. Or maybe it has you putting a limit in and you're waiting and your limit is never filled. This is where steps is perfect for you. Steps one entry would have gained an extra 15 points if you simply used steps number one. So this is on an intraday chart of the spiders on a 30-minute time frame coming into August, okay? The first week of August. Okay, so let's review what we talked about today. Remember, there are only two types of entries. You don't have to make your trading overcomplicated. It's the easiest thing in the world to overcomplicate your trading, but it's the most difficult thing in the world to simplify it. This is what steps does. It breaks it down into only two different categories. The first one is a continuation. That's what we just talked about today. Continuation trading is perfect for those strong, volatile moves. Now, sure, you'll get them in uptrending markets, but mostly you'll see them in downward trending markets, because when everyone gets frightened enough, when fear is really controlling the marketplace, you see these straight down moves the way we saw this past week. That's where the continuation can really help you, and that's where steps one helps, all right? But then there's also the pullback. The pullback is where you'll have this nice upward move, and then you have a couple of days, maybe a week or so, of selling off, where everyone thinks that's the top of the market and the trend is going lower. That's simply a pullback to a certain level for you to buy. Now, the difference between continuation and pullback, you'll have less pullback trades because you're waiting for that scenario to happen. If all the requirements need to be met for it to come to that lower level for you to buy or that higher level for you to sell. And that's perfect for a nice, slow, uptrending, upward move in the market or stock, whatever you're looking at. Pullbacks are great. But when you get these strong, volatile, downward moves that are controlled by fear, you may be waiting for days, weeks, even months for a pullback. It'll never happen. And you'll sit there and going, boy, I wanted to sell the market. My strategy or my system or that signal service or that chat room I go to, it never hit my limit, so I could never get short. I missed all this and left all this money on the table. This is where continuation trading comes in perfectly, because continuation captures those moves while the trend is taking place. Remember, steps can be applied to any strategy. So if you have a strategy right now, but you feel that, well, it's doing all right, it's not doing that great, we strongly feel that it may increase your odds for consistency simply by changing your entry points. You can apply it to any market. So we had, the majority of examples I shared with you today are daily bars of stocks, but it doesn't matter if you trade futures. It makes no difference if you trade currency pairs. We have students around the world trading this on currency pairs and E-mini futures, as well as Bitcoin and commodities. And as always, it can be applied to any time frame. So it doesn't have to be daily stocks. It can be weekly, monthly bars. It can also be intraday. It can be tick bar charts. It makes absolutely no difference. And any direction. If you like to go long or go short, it makes no difference. Steps can be applied for both styles of trading. Now, here's what we're going to offer you today. We have a 2-day steps course. We're going to share with you the curriculum. On the first day, we're going to be talking about steps number 1. That's the complete continuation entry class. We showed you a couple of examples today of how well this can work in downward markets, but we'll share with you exactly how to implement this and how to apply steps number 1. In day number 2, we'll go over steps number 2, which is our complete pullback entry class. These are 2 live days of classes with yours truly. I'll be your instructor, and I'll be sharing with you how to apply these to your charts and to your current trading plan, or if you want to construct a trading plan based off these. Remember, in this 2-day course, I'm also going to teach you a personal trading technique that is based on steps 1 and steps 2. Because as I said earlier, steps are simply entry points. They are not a full-fledged strategy. But I will share with you a strategy or a technique for trading these based off of this, and something that I've used in my own personal trading that can really help you. So if you're not sure about how to apply them, or maybe you're saying to yourself, well, Steve, this is great, but I don't have a strategy, or I'm not the type of person that can build a strategy, so how would I use this? Well, I will share with you a simple but powerful way to apply steps, and you can use this as a personal trading technique if you'd like. Okay, so here's what we're offering. Our 2-day course. This is a short-term entry points course, complete steps, 2 proprietary techniques, continuation, as well as pullback. You can apply it to any of your current strategy needs, or you can build your own. It will give you the confidence to pull the trigger. This includes the new PTS Primo charts. We're going to also include our platform so you can automatically generate these up and down arrows. This automatically generates steps 1 and steps 2 entry points. So it's not something, even though you'll know exactly the rules here, you won't have to look for yourselves. You will see these that are automatically generated on your chart. Now, we're going to give you a full year of the platform. Now, a full year will generally cost you close of $1,800. We're not going to charge you that. In fact, we're going to give you 12 months free. Just for becoming a member of our 2-day course, you'll get a free usage of the PTS Primo chart for 1 full year. Now, the beauty about this is that you're also going to get the scanner. If you're not able to be in front of your charts during the day, don't worry. You can come home at night after work and simply scan for either steps number 1 or steps number 2 trades, or both setups for the next following day, or for intraday trading, whatever you like, for whatever market you'd like. We provide you with a list of different markets, from the Dow to the NASDAQ, the S&P, to the European exchanges, to commodities, to futures, to currency pairs. You can scan for any of those markets that you'd like, okay? And you'll see what the setups are for the next day. Now, ask yourself, do you have these same problems with entries, all right? Many students have gotten back to us and said, Steve, I already have a strategy, but I need help in fine-tuning my entries, okay? Maybe I entered trades too early, or maybe you entered trades too late. students have told us, Steve, I don't know how or where to re-enter. You know, I had a trade on my strategy and I made a nice little profit, and then it just kept going higher and higher, or it kept going lower and lower. So how do I get back in if my strategy didn't generate another signal? Or a lot of students tell us, Steve, I want more trade entries. And some students will even say, Steve, I want less trade entries. The system I bought just generates too many signals a day. I can't handle all of them. And then lastly, we have students who are actually investors, and they'll say, I want to add to my long-term positions. If you've ever asked yourself any of these questions, STEPS is for you. This 2-day course is for you. And it's also going to include our new PTS Primo charting platform with lots of different updates and lots of different ways to improve your trading. Now, the regular STEPS course costs $29.95, close to $3,000. We're going to give you a great discount today for attending our Saturday webinar. We're not going to charge you $29.95. We're going to discount this by $500 and charge you only $24.95. But on top of that, we're going to also include payment plans. So if you still are having difficulty coming up with $24.95, that lump sum, don't worry. For a small deposit, you can still be up and running as soon as our course starts in the next couple of weeks, and you can still be in class for a small deposit. So this is the beauty of our working with Pro Trader Strategies, my sister site, and myself. We will, because you want to be a student of ours, because you want to take advantage of this, we will have a payment plan. So for a small deposit, you can still be up and running in the 2-day live course. All right, here's how to take advantage of this great offer. Once again, my sister site, Pro Trader Strategies, they handle all the courses and all of our discounting. You can email them at trading@protraderstrategies.com. I would suggest, if you'd like to set up a payment plan or for more questions about this, you can call them directly at area code 310-598-6677. Now, if you have any questions you'd like to ask me right now, feel free to go into the question and answer box, and I would be happy to answer them. Students are asking, what is the link at the very bottom? That link is the link that will take you to a more informational page, as well as the sign-up page for the course. But that's not a live link. If you'd like to see a live link, all you have to do is simply click on the link in the chat box. Let's see, it was just posted right now, and there it is. And it's in the chat box. All you have to do is click that on, and it will take you to a live web page of the informational for the STEPS course, okay? Now remember, the course, people are asking, when does the course begin? The course is set to begin in the next 2 to 3 weeks, okay? Sometimes toward the end of the month or beginning of September. If you know you've had trouble in these past few weeks with the downward market in play, this will really, really help you. Let's see, Jim is asking, how long are the classes? Well, the classes are up to you. I have had classes in colleges in the past where they've lasted up to 3 hours, okay? But usually classes will last anywhere from 1 hour to 3 hours, and they're going to be on 2 separate days. The days we're figuring right now are looking at maybe Thursday and a Friday, or perhaps a Friday and a Saturday. If you'd like them to be a Saturday and a Sunday, it's all up to you. But the main thing is we want to keep the classes, you know, to a small, intimate level. I don't want to have, as I've had in the past, you know, 50 or 100 people in the class, because then we lose that intimacy, and there's a lot of questions that oftentimes I can't answer because there's just too many people, and you know, that we're going over into 3 hours, and we continue to ask questions. So I'd like to keep it to a smaller amount. So that's why we want to keep the space limited, okay, to have it more intimate, and so you can really have a personal exchange with myself, okay? So anyway, depending on the size, well, usually class is anywhere from 1 hour to 3 hours, and it'll be up to you. We're going to set them for a Thursday or Friday, but remember, it depends on, we'll take a vote once we get all the people signed up and the class is closed, and we'll ask what are the best days for you, okay? Will we be trading live? No, we won't have any live trading because, once again, that goes against our philosophy. First of all, this is not a system, so we can't really trade off it. We can show you examples, but what our job is as educators is to educate you in how to apply this. And what I'm going to be doing when people were asking me, will I be trading live with this technique I'm going to be sharing with you? No, I'll show you how to apply it. But we want to get away from these live trading things because many times, you know, I did that in the past many, many years ago when I was first started teaching. And sometimes because of the style and which way we trade, you know, you may be waiting 1 hour or 2 hours for a setup. And I don't want to take 2 hours where we're just sitting there waiting for a setup. So it's more conducive to learning if we just share with you how to find these setups and how to trade them. So no, there will not be live trading. The classes will be live, but there will be no live trading because we may have to wait for hours. And also, it gets away from it because then it turns it into a crutch. And our whole philosophy is for you to make your own decisions. As I said in the beginning, the reason why most traders fail is because they're not educated. And once I start turning this into a trading room, then it turns it into a crutch where you feel, well, I guess I've got to do the same thing. And that, once again, goes into why most traders fail. We want you to make your own decisions. What my job is to provide you on how to apply these to your trading styles and your trading strategies. What your job is to study and then to make your own trading decisions. So that's really what we're doing this for, okay? Okay, as we close here, thank you. Those are good questions. I hope we share with you the power behind steps. Remember, if we go into a upward move and we start to turn around and things change and we're back on track to making higher highs, steps 2 is going to be the style of your choice. It is going to be amazing. In the past, we've showed so many amazing steps number 2 setups where you're buying at lower prices and then the market takes off after that. But let's say we go into a continued downward move, a very, very strong downward move, the way some people are frightened of. Well, this is where steps 1 will be perfect, because if you're a pullback trader and you're waiting for a bounce to get short, well, it may never come. And this is what a lot of students have told us in the past. They've said, Steve, I knew the market was going down. I was waiting and poised for it, but my strategy or my system never got me in. This is where steps 1 can really, really help you. And we'll show you exactly how to apply it, how to enter, and a different technique in which to trade with it, okay? Okay, if there are more further questions, remember, if you want to set up a payment plan, my suggestion is to contact Pro Trader Strategies. Call them directly at area code 310-598-6677. There's absolutely no obligation. They would be more than happy to set up a payment plan for you so that you don't have to come up with a lump sum. Just for a small deposit, you can still be up and running in the live classes that'll start in the next couple of weeks, okay? In conclusion, as we take one last look at our disclaimer, I want to say thank you so much for attending today. Thanks for taking time out of your Saturday. I hope you learned a little bit today about the 2 different styles of entry. But most importantly, I look forward to all of you becoming students and members of my 2-day steps course, okay? Thank you so much. I hope to see you in the class. Bye-bye.